Hi there, good afternoon. You've tuned into ET Now. We're joining you live from ET Now Motilal Oswal studio. I'm Cheryl D'Souza. With me is Shrishti Sharma, and we will take you through the next 1 hour of the trading session as we wind down for this entire week. If you look at it, it's been a week of volatility. Also, it's been a week of some sort of a consolidation creeping in for the benchmark indices. We saw some sort of a rebound in the broader markets, but today it doesn't look like they've been able to hold on to that sort of a rebound, to put it so. If you look at some of the gainers, then you have Hindalco, Tata Steel, SBI Life. These counters are holding fort in trade today. While on the flip side is M&M, that is actually hammered out of shape. 5.8% downtick coming in for M&M, and given the fact that there are talks about this new EV policy, the fact that there could be rates that could have been cut for imported EVs, and that all of those news actually impacting the stock price performance over this entire week. BPCL, Adani Ports, Tata Motors are the other set of losers in trade today, with the advanced decline ratio still skewed in the favor of declines. Sectorally, if you look at it, it's just the metal sector that's holding on to some gains, with auto, pharma, PSU, banks, all of them seeing sharp cuts. And if you look at it on the surface, at least, Shrishti, looks like it, given the fact that auto and pharma are among the top sectoral losers, and they're the sectors who've been in the limelight, not only back home, but also globally on back of the Trump tariff threats.
Well, certainly, you rightly pointed out, Cheryl, the auto and the pharma space that are reeling under pressure. And to add to that, auto also has the news flow regarding Tesla's likely entry rather, into the Indian markets, and that's weighing heavy. We'll try to discuss more on that, but sectorally, the picture is not looking that great. But it's the metal pack that is seen to be shining bright, because the China market as a whole is still holding strong, and maybe taking cues from that and the kind of cool off we have seen in the dollar index from those higher levels of close to 109. Maybe that's also playing well for the metal counters. But let's talk stocks then, and let's also welcome our special guest for today. We are being joined by Gurmeet Chadda as well as Kunal Bothra is here with us in the studios. A very good afternoon, gentlemen, and thank you so much for your time. Kunal, first up, want your take on the benchmark indices, because just today morning you were talking about that yes, there's a likelihood and a possibility that we will break that 22,800, and you also said that this Friday's, let's see if it is different from the rest of the Fridays or the previous Fridays we have seen. It seemed to be a similar story, Kunal, but what's your sense? Like 22,800, my sense is it's still defended, right?
So yeah, you can say it's defended, but I can say from what Nikunj was discussing and me and Nikunj was discussing in the morning, that मैंने बोला था that the Nifty would break below the 22,800 mark. Finally, that's happened for the index. Of course, I think today's texture is a lot more different than the texture what we've seen for the markets in the last many days, because for example, in the last few days you'd seen mid caps taking a very sharp knock. Then the last 2 days you saw the mid caps recovering, bouncing back, mid caps and small caps recovering, and large cap stocks were the ones which taken a back seat. But today it's a mix of mid caps and large caps which are actually seeing some ebb off from their previous highs or intraday highs, as the case may be. So I think what we're seeing is a very different kind of a mixture altogether, and that I think is leading to that added question that whether the index would hold on to that 22,800 mark, and whether we look at a break of 30-40 points below those levels is a considerable break or not, because the market breadth is not deteriorating as such like what we've seen the previous many legs on the downside for the indices. So I think what we need to see is just establish a buffer, maybe 100-150 odd points from that 22,800 mark. If we close below 22,650 odd levels, that's where I would believe that the pace of correction on the downside could accelerate.
All right, so that's the take coming in on markets. Good afternoon, Gurmeet. Thank you so much for joining us on the show. And Gurmeet, I was just going through your Twitter profile, or the X profile, and I was just noticing the fact that you're saying, you've written about the fact that every time you have an entrant that comes into a sector, we kind of write off that sector. And based on that, actually, we tend to also make investment decisions, and said that's not what you should be doing, given the fact that now everyone's talking about Tesla and the likely entry into the Indian markets, which has been impending for the last two to 3 years. Every time Elon Musk has some meeting, we are expecting Tesla to open shop here. So based on that, what's your take coming in? Given the fact that you can see Mahindra hammered out of shape, Tata Motors was also bearing the brunt of that. How should one actually look at all of these developing scenarios and then take a look at investing in sectors like this?
I think the initial reaction is news-driven and a bit of sentimental. And considering that the sentiment has been weak, we are seeing a bit of price cuts. But if you go a little deeper and go as per data, somebody like a Tesla coming actually will boost the premiumization of the car story rather than it's a win-win actually if an innovator comes. You look at China, for example. BYD started off as a battery maker for mobile, then pivoted to battery maker for auto, and then now is the leading EV maker in the world. China also has CATL, which is one of the largest lithium iron phosphate battery maker of the world. So for EV to get adopted, the ecosystem needs to be built. It can't be done overnight. The charging infra, the battery cell, the entire ecosystem. So look at last year, for example, we sold 40 lakh cars, of which 1 lakh car were EV, which is 2.5% adoption. Now, to move from 2.5 to 10-15% adoption, we will take few years. It's not going to happen next year, right? You don't have that capacity. You can't suddenly. Plus, the price point at which Tesla sells in US. Now, assuming duties are also lowered in India, I think the lowest price, in my view, will come to like 30 to 40 lakhs, right? And if you see our top 10 selling cars in India, only two cars above 20 lakhs make the cut, which is your Scorpio and Creta, and there also the entry price is more like 16, 18 lakhs, which is the starting point. So I think it's a little overdone in my view, but markets being markets, I may say it is overdone, and I may be further humbled with more price cuts. But this is the time to actually look at some names where I think the reaction is more negative just from the news point of it. I think the adoption will take time, and it's a win-win. And whenever a foreign entrant comes, which is an innovator, it builds the EV ecosystem. And India is a very hybrid powertrain market. So you'll have a combination of EV, hybrids, CNG, and the IC engine. It's not that it will suddenly become an all, EV market.
Well, point taken, Gurmeet, because even CLSA has a similar view, I would tell you, because CLSA is saying that the Tesla-like re-entry is expected to actually boost the premiumization of the cars in India. They're just highlighting the fact that in India, the EV penetration in the whole passenger vehicle space is just close to 2%, and there's a huge headroom of growth that could be in place for Tesla, as well as some of the other EV players as well. They're highlighting that under the new EV policy, Tesla is actually expected to invest around over 40,000 crores, and in that as well, they believe that the derating, or rather the recent correction in the M&M that we have seen with expectations of a threat or a competition coming in is already done. The correction or the likely news impact is already in the price, and they're also saying that they do not believe Tesla's entry would have any significant impact from the likes of Maruti, Hyundai Motors, and even Tata Motors for same. And they have also done a very interesting analysis saying that Tesla cars in global scenario, if we see, then the price range over there, and even if the import duty could get slashed from like 110% to 15% now, Tesla actually could do two things, because to get the price lower to close to that 20 lakh mark, what the reports are highlighting, they either have to cut down some of the features, or they have to really get more of the manufacturing done in the Indian markets, plan more localizations through that, so that their cost is actually come down, or they could also go ahead and sell in loss. That is not likely, but overall the point that they want to make is that despite the fact that seeing it as a threat for the whole car industry, this could actually be a good opportunity, and some of the stock reactions are maybe overdone. So that's CLSA's take on autos. But with this, let's also go across and listen in to the editor's take, wherein Nikunj Dalmia is sharing his take on the auto space.
Since everybody in the market is talking about Tesla, the impact of Tesla on the Indian car market, how will that change dynamics for EVs? How will this change dynamics at least for the luxury end of the car market? All that and much more, we would be taking a deep dive on this edition of Deep Dive with me. Now first, let me establish the size of the Indian car market. We'll talk about Tesla a little later, but first let's look at how large the luxury car market in India is. The luxury car market before COVID in India was just 20,000 cars a year. Now that has ballooned to about 50,000 cars. That's an estimate for 2024. The final numbers have not come out, but 20 has become 50. So the luxury car market in India is not a very large car market. Within that, if one really looks at Tesla and the different pricing of Tesla, currently Tesla has a 110% tariff. So Tesla's Model T3 in the current, after the current tariff, will be, the landing price would be 45 lakhs. Model 2 would have a landing price of 50 lakhs and Model Y will have a landing price of 70 lakhs, which naturally makes it extremely not competitive. But if you assume that there could be a duty rationalization, tariff wars will ensure that Tesla will get a red carpet welcome, tariffs would be reduced, then the prices of Tesla, which are right now at 50 lakhs for Model 2, Model 3 and Model Y, the popular models, could be ex-showroom 28 lakhs, 25 lakhs and 38 lakhs. That means that there would be a large part of the SUV market which is below 25 lakhs, which is the major market. Tesla is not going to have an impact whatsoever. Now, if one really looks at the history of Indian car market, and this is very fascinating. We tend to think that a foreign player is going to come and have a disruptive impact. I just want to remind our viewers that there were nearly a dozen car companies which were operating in India about 15 years ago. All of them wanted a big foot in the door and they wanted a dominant market share of the Indian car market, especially the passenger car market, especially the entry-level cars. This is how things are stacked up right now. Maruti has 42% market share, Hyundai has 14, Tata Motors 14, Mahindra & Mahindra has about 11, others have 19. But the picture, let's say a couple of years ago, was strikingly different. Everybody wanted to have a major pie in the Indian car market. GM, Volkswagen, Piaggio, Daewoo. Some have gone bankrupt, some have gone away. But the Indian car market, with the exception of, let's say, Maruti and to some extent Toyota, is still dominated by brands like Mahindra & Mahindra and to some extent Tata Motors. So global players in India have not had a very good ride. In the exception there is Toyota and to some extent I would say Suzuki, which again has a great and a very long history with India car market. The Europeans are there, but they're not very successful. The Americans, at least Ford, and for GM and Chevrolet, the experience has not been great. So is Tesla's entry a real fear? And let's look at Anand Mahindra's reaction. And he says that, look, we were questioned in 1991 when the economy was opening up, and we've survived. Working like maniacs to still be around and relevant even a century from now. That is the spirit of India.
Welcome back to Closing Trades right here on ET Now, where we are discussing the markets with our experts. And today, one such pack that is doing great is indeed the metal pack, because of late we are seeing stocks like Hindalco, Steel Authority of India, they are holding up quite well in today's trading session. But another stock, since the start of the day, Kunal, what I'm seeing is that Bata India is another stock that has been holding to gains of almost 3%. Any different or any technical setup that you can pinpoint for this counter?
I think nothing major. The only fact is that for Bata India, the stock is going out of futures, I think from next month onwards. This is the last month where you're seeing the stock in the futures. So maybe some bit of unwinding or maybe conversion of the short positions or closing of the short positions and converting of long positions from futures to maybe cash. And that could be because we are heading to the expiry week in the next week. So that would be the only reason why I would probably expect that Bata India as a price chart, and all of a sudden the stock is going up, because I remember I think the last 4 or 5 days we had actually seen the stock going into a correction from 1370 or 80 levels. It had fallen down to 1270, 1280 thereabout. So this could just be a more of a very tepid rally into the stock. And looking at the scheme of things, I would probably expect that maybe close to 1320, 25, you might actually see the stock facing resistance rate again.
All right, so that's the take coming in on Bata India. We also have Nagraj Shetty on the show with us. But before I come to you, Nagraj, Gurmeet, let me come to you, and I'm going to talk about the FMCG index. On 1st of February, everyone thought that this would be the darling sort of sector for everyone to look at for the rest of the year, given the fact that you had this big push towards consumption. You saw 3% up move for FMCG index then. Post that, since the budget, the index has fallen about 8%. It has fallen for a 15th consecutive trading session. I want to understand, now, should one look at the space, given the fact that there could be some sort of good sort of news trickling in the H2 of 2025 for most of these sectors? Or do you think that despite the valuation correction, this one would be a no-go irrespective of what happens?
I think the budgeted reaction was more to do with the tax cut on FMCG. But if you see the commentary from most FMCG players, including HUL, Nestle, Britannia, I think what they have done is they've reduced damage. So volume growth is hardly there. It's in very early single digit, and valuations are still not cheap despite time and price correction. So till the time you see a durable rural recovery in play, good harvest season in April, and some more uptick there, only then is when you can be a little more comfortable there. I think the better way to play consumption boost is discretionary, and there you can you can play consumer durable, you can play travel and tourism, you can also play a bit of financial consumption. Some of the capital market plays, in my view, are part of that, and so maybe some of the new age businesses. I think that's a better way to play that rather than go with staples, because I really don't see double-digit volume growth coming very quickly there, and valuations are not dirt cheap. I mean, they've obviously corrected, but they're not very, very cheap.
Gurmeet, also give us a sense on the tourism theme, and here I would like to draw your attention to stocks like Indian Hotels and some of the other key players in the hotel industry, and even from the travel theme, maybe Indigo, because in the market fall, these stocks did participate a little lesser than the other large players, as well as this is the theme which many of the fund managers are liking. Any such stock or rather segment that stands out for you at this point in time?
Yeah, so as I said, hotel stocks have been reporting good numbers. Recently you saw ITC hotels getting hived off. I think that's corrected reasonably well. Around 30,000 crore market cap. In terms of capacity, in terms of growth plans, I think it's almost 50-60% of what Indian Hotel does, and the valuation is almost one third of that. Not strictly comparable though. They still have to demonstrate how asset light they can be, the way Indian hotels have pivoted post-COVID. That is something. Interglobe, you already mentioned, that's been our holding for very long, been very constructive there, and now it's almost two-thirds of the market share now is with Interglobe. And I think the new business class, I think market can expand, and that can actually increase both the average fare as well as a bit of a premiumization, if you want to call, within there. And maybe IRCTC, but IRCTC, of course, other than ticketing, has e-catering as well as the water, which is Railway Neer, which are three dominant businesses. So I think you can play through a combination and make a basket. And as I said, some of the consumer durable names, I think you would see that extra 5,000, 10,000 saved will probably go towards maybe some of the AC makers, some of the electronic makers, with the considering that we probably will have a longer summer season ahead.
Right. Nagraj, good afternoon. Coming to you, just wanted to understand your take on the entire power space today. Yes, JSW Energy is having a good run given the fact that you have an initiation note coming in from Morgan Stanley. So on back of that, you have JSW Energy that is seeing a good move. Over the last few trading sessions, you saw some good momentum coming for NTPC as well, on the back of the fact that there are signs that the power demand was pretty good in the month of February. But if you have to look at the charts, do you think power stocks are making a comeback? And if yes, which one do you think would stand to benefit going ahead?
Good afternoon. Yes, indeed, power stocks have been bottom reversal mode, like you've taken a few stocks which are moving from the lower levels. If you look at the NTPC has bounced back from slightly lower levels of around 302 levels in mid of February and bounced back. Overall chart pattern, the NTPC is looking slightly attractive. The overall chart pattern is indicating that some more upside is left for the NTPC, and the next overhead resistance should be watched around 350, 355 once it sustains above 320 levels in the next day or two.
That's the take coming in on some of these power names. But Gurmeet, any such stock within the pharma space that you like at this point in time, given the correction that for the past 4 days, this news is playing heavy within the pharma basket, although the consensus view is that it should not impact the players' business largely and the tariff implication should not be that much versus the anticipation. But where should one place their bets within the pharma space? Because I was just reading a report highlighting that the exports have done very well in the month of January itself.
I also personally think that pharma relatively will be lesser impacted because the supply chains are very complex. It's very different than sourcing auto components or electronic components because of deep research capabilities, complex chemistry skills, and very complicated supply chains. So, but since tariffs is the buzzword, so then in the near term, the generics companies with high exposure to US could remain under a little bit of pressure, but branded generics because I think we've seen a correction. Something like, let's say, for example, Mankind Pharma, which is 99% domestic. The drag has been mostly because of the acquisition they have done, where they've taken some debt. So EBIT is growing 30%, but the PAT has got impacted because of the interest payment, because of the debt. I think they should be able to retire that over the next maybe 18 odd months through internal accruals and selling non-core assets. Then they are focusing a lot on the consumer health portfolio. Even the BVS portfolio will start seeing more synergies, reflecting in both top line and bottom line, and eventually would probably add to the EPS. Then you can have some select CDMO names where we believe there are a lot of molecules which can get commercialized. A lot of capex building has happened over the last 2-3 years, especially companies which have good pipeline in consumer health, in animal protein and health, and some path-breaking new therapies. So we are looking at something like Loris Labs there, DVs we have been holding for very long. So combination of maybe CDMO and branded generics, I think is something can be looked at, both from an earning momentum perspective and the size of the opportunity perspective.
Gurmeet, I want to come to you and I want to get your sense on the power related counters. We've got a chart check on the power names, but what's your take coming in the power sector as a whole? Do you think this merits a relook right now, or do you think that entire theme played out and you have to wait for some more time before entering? Gurmeet, this one was for you.
This is for me?
Yes, Gurmeet, it's for you. On the power sector, I just wanted to understand, do you think now is the time to enter this space or you should wait for some more time?
No, I think it's a if you see within power, if you see renewable, I think every year you will see a 30, 40 gigawatt getting added, which translates into a capex of, let's say, 1.5, 2 lakh crores. I think the bigger issue in the bottleneck, not in India and globally, is the grid, the transmission part of it. I think that is where I think you will have long-term visibility of order book and earnings, right? Provided execution as well. So some of the PSUs like Power Grid have corrected quite a bit. Tata Power is again more integrated both in terms of generation, distribution, as well as the EV play. Power Grid trades at about 15 times trailing, 12 times forward, good dividend yield as well. Then some of the transformer makers, I think, would present opportunity. Similarly, high voltage, which we call as HVDC. So the big challenge is transmission. And I think that is where probably you will see better earnings, better visibility. So we are more bullish on the transmission side of it, and not as much on the purely just the generation side of it.
Transmission is the place to be if you want to look at the power space. But Gurmeet, with this we'll let you go and really appreciate you taking the time out and speaking with us this afternoon. But with this, viewers, it's now time to slip into a very short break yet again. But don't go anywhere. As we come right back, we will take some of the trading ideas from our experts. Stay tuned.
Welcome back. You're watching Closing Trades and we are joining you live from Motilal Oswal studio. And remember, the markets today actually are not doing that well, but nevertheless, we've not fallen more from the initial dip that we had actually witnessed in the markets. We are sub that 22,800 mark now, actually trying to claw back, and hopefully let's see where we actually shut shop for day. But now we also have Ajay Bagga, who's joining us on the show. show along with Nagraj Shetty as well as Kunal. And before I come to you, Mr. Bagga, let me go to Nagraj. And Nagraj, I just wanted your take on especially some of these real estate names, given the fact that real estate sector has also seen a very sharp fall. There was a period of time when this sector was only roaring and raging, but this one also has had its fair share of correction. But do you anticipate more correction is in store, especially for some of these realty names?
Yeah, if you look at realty chart, I don't think it has bottomed out significantly. Low tops and bottoms is visible on the charts, and this is just a bounce back what we have seen last few sessions. And I'm expecting some more consolidation, not a big decline, though some consolidation is left for the realty names like DLF and other things. So more consolidation likely before showing upside bounce in the real estate.
Today coming in on real estate pack, but Mr. Bagga, I would like to come to you. A very good afternoon and thank you so much for your time. A lot of these news plays flowing around with respect to the threat related to tariff, the emerging market flows and etc. But give us your sense on the broader market space and any pockets of opportunity that you are spotting right now, because though the consensus view or the buy is on the large cap space, but within the broader market space, any niche pocket that is looking interesting to you?
Right now, no. I would say let's hold on for the broader markets right now. Overall, if you see the global macro, what are the global bond markets telling you? What are the global currency markets telling you? Stock markets are still complacent. They are not believing the Trump threats. The Trump strategy is to shock, then negotiate, then come to a deal, which might be a 1/10th or 1/20th of the original ask. So the markets this time around are quite wary and a bit complacent, I would say. Currency markets have not reacted. If China actually believed that there is a 25-60% tariff coming, you would have seen the yuan moving in anticipation. Yuan, in fact, has strengthened this week. So that currency move is not coming through. The bond markets, if you see emerging market bonds, are one of the big long plays in the market. So the market is largely long gold, long emerging market debt, and long US equities, long Chinese technology equities. Those are the four favored plays that we are seeing globally, and none of them is really reflecting Trump tariff probability. So I would say right now the markets are a bit complacent. We will know only over the next 2-3 months. April 1st is a pivotal moment when announcements will start coming, whether tariffs come through or not. And then April 2nd onwards, you will start seeing some follow-on announcements coming in. But right now, markets are discounting that Trump is a lot of fury and fire, but not enough action on the ground. As far as the Indian markets go, I think June or July is when we'll get a chance to enter in. Of course, markets are not so clean cut and don't give you the chance to call like this. But right now, I think we have at least 2 quarters, this quarter and next quarter, of a slowdown. And markets will anticipate a recovery in September. The base effect also comes in last September. Year-on-year growth had started bottoming out. December growth we are expecting at about 5.8% for the GDP as such. And going ahead, we see the recovery coming in the July to September quarter. And markets will move in anticipation of that. But that's a clean line. Never happens in the markets. I would be more cautious and not really recommend anything on the mid and small caps right now.
All right, so that's the take coming in on the mid and small cap space, and the fact that not now, or rather now, Mr. Bagga will not be looking to venture in that particular domain. Nagraj, let me come to you actually and get your BTST ideas for our viewers.
Yeah, I have two BTS tier two stock calls. First one is from a long side from metal front, National Aluminium, NALCO. NALCO recently, after a decent downward correction, has bounced back from around 178, 180 levels. In the last three sessions, we have seen some bullish candlestick formation, and it has broken above the hurdles of 10 and 20-day EMA as well as 200-day EMA, somewhere around 198, 199 levels. The overall chart pattern is looking positive. Seems like important bottom formation around the lower levels. One can look to buy at this point of time. Currently 20160, 20180, and the upside target would be around 212. That would be an immediate upside target of 212. One can place a stop loss at 195, 196 levels. And one more stock I have on the short side, that is a pharma front, Glenmark Pharma. What we can observe on the chart is a continuous downtrend in the Glenmark as lower top, lower bottoms is visible on the daily chart. And recently, after a small bounce, it has reacted down. It is well below the 200-day EMA, currently trading around 1390, 1300, 1302 levels. One can look to sell at this point of time, and the downside target would be around 1230, 1240 levels, and one can place a stop loss at 1335.
Those are the BTST ideas coming in from Nagraj. Mr. Bhagat, let me come to you actually. I wanted to get your views on the power space. We just had news a short while ago where the government sources have said that the accumulated losses of the discoms is pegged at around 6.92 lakh crore rupees as of March 31st, 2024, and 7.53 lakh crore rupees is the outstanding debt, especially when you talk on that particular space. What's your take coming in on the power space, and also the fact that, do you think that this sort of a performance from discoms will be a cause of concern going ahead, or someone should watch out for this?
Yeah, power is a mega trend for India, and you ratchet it up along with renewables. So those two will be outperforming sectors for at least a couple of decades. But where is the weak spot? The weak spot is this discom, the distribution companies. Largely, these are state-owned companies which are forced to give free power in a number of states, and those subsidies normally take quite a few months to flow through, and most of the states are running towards bankruptcy. We saw the case of Delhi, which used to be a surplus budget. It had a deficit of nearly 5,000 crores on a very small city-state kind of a state budget, and we are seeing that across big states as well, where discoms are not getting back their costs because of free power to farmers and the new trend of offering 200 units free power even in the urban sector. So there is talk of government privatizing this. There could be a one-time write-off of these outstandings. Of course, the banks and the finance companies who have lent to these discoms have to be made whole, and the government will have to create either a bond structure or an IOU structure to repay these loans. No private financier or private discom will step in and assume such losses or such outstanding debts. But the big issue is the right pricing of power. So the growth on the supply side is very strong. So right from the power plant makers to the generation companies to the transmission companies who are setting up the transmission grids, both in the public and private sector, those will do very well. The companies financing them will do well. But this weak link is this discoms, which are largely state-owned, which are making losses due to the subsidies to the agriculture and the urban poor. And that is unfunded on the state's balance sheets, and that's coming home to roost. So we'll have to find some solution, but it will not upend the dynamics of the power segment because the industry is paying for that. Plus, there is enough funding on places like solar, places like hydrogen, places like hydro. Those have enough funding and those will continue to grow.
All right, so that's the day coming in on the power space, but let's move on to another story then. And AMFI has launched 3 new initiatives for the mutual fund industry. The much talked about 250 rupees micro SIP, the Jeevan Tarun plan and the Mitra platform as well. My colleague Anurag Shah caught up with the chairman Navneet Manot to understand more about these schemes.
So we have 5.3 crore unique investors. This number needs to multiply over the next several years, and what we have tried to do today is to reduce the ticket size of the per month SIP, bringing it down to 250 rupees, where every fund house will bring down the size of the minimum ticket size of the SIP in certain funds to 250. If you look at 250 rupees, that's almost 8 rupees per day. It makes it like less than what you can buy a cup of tea or maybe a vada pav in Mumbai. So we are really making it very accessible, very affordable, very convenient, very simple, and then people can participate in the growth story of India. So regardless of your economic strata, regardless of your background, you can also participate in capital markets of India. That's the initiative under the guidance of SEBI AMFI has done.
So you spoke about the 250 rupees SIP. Do you think it will be viable for AMCs to continue?
So it has been structured in a manner with the guidance of SEBI, we have worked with all the ecosystem partners, whether it's the KRAs, whether it's depositories, whether it's exchanges, banks, everyone. We are trying our best that it becomes viable. In case we can try to ensure that people are continuing the SIP for a couple of years.
Okay. And so the Mitra platform, how this platform will help investors and to whom you are targeting?
A lot of people who may have some units which are have been forgotten or have been untraceable, older units, I think they can go to this platform and can find out which mutual fund they have invested in, what is the status of their current investments. And I think this again is a part of the overall investor protection that SEBI and AMFI together have taken, along with our ecosystem partners like our RTS, KFintech and CAMS.
Right, and also you had my colleague Anurag Shah who caught up with LIC MF's MD and CEO RK Jha, who lauded the SEBI chairs of launching 3 landmark initiatives in the mutual fund space, which will be able to attract and pull in the young investors to the capital markets. So let's go across and listen in to excerpt of the conversation.
I think these 3 initiatives are landmark and they will be definitely a game changer. As we all know that financial inclusion is an extremely important step, and the SEBI has taken the sachetization of SIP, which is a very, very important and critical thing. And presently we have only around 5.5 crore unique investors in mutual fund industry. This has to grow to minimum 25 crores, 50 crores. So this miniaturization of SIP, this pocket SIP, Choti SIP will be a landmark and a game changer for the entire industry and for the financial system of the entire ecosystem. And it will help in bringing more and more individuals, young generation, the low earner people to join SIP bandwagon and take the benefit of wealth creation over a period of time. Okay. So this is the first thing. Secondly, as regards Tarun Yojana, it's an extremely important and step by the SEBI, because though we are conducting investor awareness programs, we feel that there is still a lot of gap in financialization of investment purposes or mutual funds which we propagate among the people, citizens of the country. So this Tarun Yojana will be an important landmark decision.
Mitra portal for the unclaimed or those who invested but unable to track it. So do you think it will help large number of investors?
Definitely. I have come from LIC also, and LIC also we find that there are in LIC also, since we have around 30 crore policy holders there also, we had to face lot of difficulties while settling claims because of not able to contact the claimants or the policy holders at the time of maturity of claims. So this is an extremely important step by mutual fund industry, by SEBI also.
All right, but just a few minutes less for the market and the market for this particular week to shut shop. And what we are seeing is that there has been no substantial recovery from the day's lowest point, at least for Nifty Bank is what we can say this. But if we talk about this particular week, then definitely the auto pack was under tremendous pressure. The pharma sector as well was seen to be declining. IT sector as a whole was actually down for the second straight week, hitting the 3-month low for itself, when stocks like LTI, Mindtree and TCS were the biggest drags then. So let's see that how the closing pans out, but nevertheless 22,800 is something that is still sticking on when it comes to Nifty 50. But Kunal, before we say goodbye to this day, give us your BTST ideas, any BTST trades in this particular market?
Yeah, one buy and one sell, it makes sense to have a mixed approach, because we are just about at a touch and go towards the 22,800 levels. So the first one is a stock which I've been bullish on earlier also, and I have been recommending buys. So Tata Steel is something which I would recommend at current levels. My sense is that the stock is now going into a very strong breakout, confirming a breakout above the previous highs of 134.5 levels, targets of 148, and stop loss could be now revised to that 135 mark. And the second is a sell on Lalpath Labs, a stock which has given a breakdown of sorts on the daily charts today, breaking below the previous shorter term moving averages, the 20 DMA. So would look out for targets in the region of 25.50, stop loss at 26.20.
All right, so those are the BTST ideas coming in from Kunal as well. It's a buy and a sell call on that particular front. But Mr. Bhagat, let me get your closing comments, and this closing comments I want for the OMC pack. Because given the fact that we have certain news flows talking about the fact that how they may be paid for the LPG under recovery, but if they do not get that, it could be an ugly year. That's what the brokerage note is also mentioning. What's your take on OMCs? And if someone wants to even play this theme, do you think it's worth venturing into it?
Not right now. I think the model is spoilt because of the LPG under recovery, and we are seeing more and more announcements from state governments. So overall, I think the pricing power is lacking. You have better options in time than the state OMCs. I would say still a no-go zone.
So stay away from OMCs even after the sharp correction that we have seen of late. But yes, just 5 minutes left for the markets to shut shop right now, Cheryl. And given the fact that 22,800 is something that exactly where we are about to close today.
Right, absolutely. 22,800. Kunal, hopefully if we are able to sustain or at least touch that mark towards the closing, what's your anticipation when you come for next week? I know over the weekend you will have various news flow that may decide the way how the markets may move, but what's your sense?
So even if you look at the Friday's reaction in the last 6 Fridays when the markets have closed negative, the start of the next week, the Monday, the next trading session, we've actually started on a bit of a tepid note. And I think throughout the day there has been some bit of slight selling which generally takes back on the next week also. So I think the only change which can happen to that kind of a trend is if large cap stocks start to participate. And I think if that happens, that's where we probably expect that maybe the markets could get back into a bounce back mode. And the previous attempts, we were never closer to the previous critical support points of 22,800 levels or thereabouts in the previous Friday. So that could be the only change this time around. But yeah, I would probably expect that it's better to wait and watch and see how the markets react to a slew of news flow and whether the large cap stocks participate or not going to the next week.
Absolutely. Let's wait and watch, and let's see if the large caps actually participate coming into next week. And if you go by the last 5 or 6 Fridays in the way how we shut shop, Mondays have usually opened up on a tepid note. And if it's a tepid move coming in for the markets, I don't think anyone is complaining, given the fact that this entire week we were actually trading in a range. But now as we wind down for today's trading session, as you can see that the Nifty is below the 22,800 mark, a key support level that everyone was talking about. It was Nifty Bank today underperforming the benchmark indices, 0.8% downtick coming in for a Nifty Bank. Broader markets were the ones that actually held out for the last 2 trading sessions, but today that's not the way how the print has been. It's the broader markets who have fallen much more than the benchmark indices. 1.5% cut coming in for the mid-cap index, small-cap index shutting shop 0.8% lower. M&M, the top loser on the Nifty this entire week, hasn't been great coming in for M&M. 6% downtick in today's trading session, and the stock is now sub that 2,700 rupees mark as well. You also have the the OMCs that's in the limelight, because a lot of them are hoping that things may work out when you talk about under recoveries for the LPG. But if that does not happen, then yes, OMCs will be hit hard. That's what the brokerages are indicating. HPCL, BPCL, IOC, all of them down and out in trade today. Talking about the list of gainers then, and some of them that have held out in trading today is Hindalco, the metal pack, remember, outperforming the rest of the market. So Hindalco was trading higher by about 2%. Tata Steel also trading higher by about 2%. Eicher Motors on the flip side, if you look at it, it's actually outperforming the rest of the auto pack, which is it's trading higher by about 1.5% or so. Tata Motors is the other counter to watch out for, because that one is seeing knockout about 2.5%. Pharma Index is the other one that has been in the news the entire week, and it's also shutting shop much lower, significantly lower, about 2% lower coming in for the Pharma Index. Realty is the other one, 1.5% downtick coming in for the Realty Index. Some of the other names that you need to watch out for and that have been actually making news of late, one of them is Piramal Pharma, Aurobindo Pharma. All of these counters have been in news of late. Also, you had CIE, which is reacting to its numbers today. KEI brokerage initiation note, so KEI was bucking overall market weakness. JSW Energy, JSW Infra are the other counters that have been seeing good moves into it today. Godrej Industries is seeing an uptick of about 8%, shutting shop higher by about 8%. Apart from that, you also have JSW Energy, like I mentioned, 8% uptick coming in for that one as well, 6% now coming in for that one. On the losing end of the market, you also have some names like the Cyient, which is down about 6% or so. Remember that there is a new management at the helm at Cyient, but that one is not seeing an uptick. That one is actually not holding on to gains. But as we wind down for trade, 0.6% downtick is where the benchmark indices are settling in, and Nifty way below the 22,800 mark. All right, as we wind down for trade, thank you so much, Mr. Bagga, as well as Kunal, for being part of the show and taking our viewers through all the stocks that will be in focus and the sectors that you should watch out for. But with that, we are totally out of time in this edition of Closing Trades. Thank you so much for watching.